You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That funky tune means it's time once again for a little program we like to call around these parts the option block. A nice heady mix of some options analysis, some what's trading on your day-to-day trading activity, and of course some unusual activity. We do a lot of that, as well as of course diving deep into some option strategy, answering a bunch of your questions, peering into the future. Mix it all together. We have the tasty cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as of course from the ever scintillating, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to choose from, including many, many, many archived episodes of this fun and fine program. Over 500 at last count, so crazy cakes. 500 plus hours of content for you guys to imbibe on this one show feed alone. You take the whole network feed down wherever you like to listen to your podcast, so iTunes or TuneIn or Stitcher or Google Play or iHeartRadio. If you decide to just go whole hog and subscribe to our network feed, well, you're getting a lot of shows there, let me just say. So buckle up. You got your options content set for the day, the week, the month, the rest of the year if you're so inclined. So we can keep you busy. Of course, you can always find us via the app stores on those outlets as well. iOS, Android, even the beloved Fire OS. We have our app there. Our app's still a great way to get a lot of the back content as well. It makes it a lot easier. You don't have to navigate through the stores. It's all there. Just make your playlist of your favorite shows or indeed your favorite episode, hit stream or download, and bam, you're off to the races. I should also mention hello to all of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. If you follow us on social media, I know a lot of you guys do. We tweet out the link there. If you've ever seen the link before, it's that same link. Just bookmark it, and you can join us there for all sorts of witty comments and banter and repartee in between the segments. You can ask us your own questions and all the other fun stuff. Get the show before it goes out to the rest of the networks. You get to be the first ones to hear it. And you can make fun of Andrew for all the fun things he says. Mixlr.com/options, I think, -insider, something along those. Don't quote me on that quote, on that URL, because it's a crazy one. All right, and speaking of crazy people, let's see who's joining me on the old program today. We got a great team lined up for you. Starting out with the aforementioned crazy one, beaming in all the way from the great Principality of Maine, the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the Option Block program, sir.
All I can say is I'm taking umbrage early.
It's an early umbrage.
I
It's an
seem
EU.
to be the butt of all the jokes, which means everybody must tune in and listen to all the wit and wisdom that I have to spew forth in this option block.
There will be a lot of spewing going forth, whether it's wit and wisdom, we shall see. But a lot of spewing nonetheless. I'm getting down a weird road already. Let's instead turn to the quieter, calmer, more tranquil domain of St. Charles, Illinois, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors, a.k.a. RCM Alts, a.k.a. RCM Futures, a.k.a. all of the above. Uncle Mike, welcome back to the program, sir.
Always great to be here with no umbrage to report on this fine Monday afternoon.
How can you take umbrage? You live in St. Charles, paradise on earth, sir.
I don't know how I possibly could myself.
And last but not least, we are joined, rounding out the old panel Today, we have a great guest for you. He's Mr. Brian Overby, the senior options analyst over there at Trade King, a.k.a. the options guy. You also may recognize his voice from his weekly appearances over here on the old network on Options Playbook Radio. Mr. Overby, welcome back to you, and how are things over there in the land of Trade King?
Things are going well. Thank you so much for having me today. I'm looking to get my hands dirty talking about some options.
All right, let's do it. Without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, and welcome to the trading block. Like the man said, this is indeed the portion of the show where we break down what was moving, what was shaking, or perhaps not so much. At the end of the day, net. We had a bit of a range on the day. We kind of ended up settling out kind of meh on the day. Most of the major indices closing up or down fractionally, pretty much unched on the day. That includes the old VIX cash up about half a handle to about the 1460 or so range out there in VIX cash land. Getting some of that weekend back and a little bit more. That's because there was, despite the fact that we closed a little bit unched, there was a little bit of intraday volatility, a little bit of intraday action where people are saying maybe is the rally continuing? Oh no, the rally is losing steam. We had actually a close to, not 20, but I'd say about 15, 16 handle range out there in the S&P. So reflecting that there was a little bit of back and forth before we settled out at the pretty much resounding meh that we ended the day on. And Brian, since you're our guest, I will give you pride of place today. A lot going on in today's marketplace, but what caught your eye in today's activity, or perhaps lack thereof?
Well, I guess the biggest thing has actually happened over the last couple of days, and not quite sure if you guys have noticed this, but a few days ago we actually had a fairly substantial update in the S&P 500 index, and we still saw the VIX go right along with it to the upside. So it doesn't happen that often, but I found that very interesting that, there's still a lot of trepidatiousness as far as this rally in the marketplace is going, and especially in the S&P 500 index. Find it interesting to see the Russell just skyrocket, almost like it took a little blue pill or something, but the S&P 500 index isn't going along with it. And we still see the VIX. I think, like if you just look at the historical volatility as far as the S&P 500 index is concerned, we're down below 10% in historical vol on a 30-day basis, and we're still seeing the VIX trading up near the 15 level. And I just think that there's a lot of uncertainty in this marketplace. I would like to see the S&P follow along with the Russell, but it's not. So a lot of interesting trades. I mean, as far as the market is concerned, I think that this is a trader's market. This is what you like to see. It's just trying to figure out what you want to trade in.
Right, it has been an interesting scenario from a volatility perspective. Realized vol right now, you're right, hovering right around that magical 10 threshold, and yet we're seeing, you're right, VIX cash substantially higher, and the futures higher there still. Not too much, not the huge discrepancy between the cash and the futures that we saw maybe a month or two ago, where it was 2 to 3, 3.5 handles out there, but still interesting to see that. And of course, you're right, maybe traders are attracted by the relatively low realized vol. Maybe they're going to come in and say, hey, time to sling them their options. That said, Mr. Rock Lobster, your people in your chat room are always slinging options pretty much all day long. That's what you folks do. So what was catching the eye of your chatties and indeed your eye today out there in today's market activity?
There was slinging going on, I have to say. A little bit of slinging. I think the whole curiousness is how the rotation is causing the volatility. Apparently Donald doesn't like Silicon Valley and technology, but he likes financials and commodity stocks. That's how the great unwind of November of 2016 looks like it's going. I mean, the Qs are down pretty solidly from their highs. And let's see what I was trying to look at the last. Did we trade 120 in the Qs? I believe we did. There's that high spot. Yeah, a little over 120. You have stocks like, Amazon, Google, Facebook, down around 10 to 15% from their recent highs after pretty decent earnings. I mean, Amazon disappointed a little bit. Apple kind of made people sad, but still from those levels down. But they're selling everything. Microsoft, they're selling off, although not as much. So I think that is causing whatever a big piece of the volatility is just massive flows of cash moving out of big tech and into financials and commodities and, stuff that's domestic, essentially, like for the Russell. And when you have, those types of realized moves on the upside, I mean, the Russell was up 1.7% up today. That's kind of messy. However, if you're getting out of half of the market cap of the S&P 500 and you're getting into the other half of the market cap of the S&P 500, that makes the S&P 500 go nowhere as an index. So today we're up a whopping 25 basis points. That's not percent, or it's not like it was 0.25 points in the SPX. So and you have a little VIX is starting to look now right around the Fed, which is, I think the market's already predicting a rise. So I think you have those two things. So there's actually not, I think like Brian's right. He's like, there's nervousness because all of a sudden everybody just yelled, jump and switch or whatever. They're getting out of everything and into something else. I'm thinking if they have like smarter tax laws, this is an idea Mark has, and I think it's pretty good. Maybe some of the big tech cap or the big cap tech stocks will start repatriating some dollars, or maybe loosening up or kind of rationalizing some tax laws, which I think would be overall better for those companies sitting on hordes of cash. So I think it's a buying opportunity. I bought a little Google L today. I don't know how. I would like to see before I got maybe a little more, but I'd like to see a day where they stop going down. I don't know if it's over yet. This is kind of starting to nibble away at a stock. I don't really trade options like a falling knife type of way. I don't think that works very well. It could sometimes, but as far as I like to see these big tech names stop going down for a day before I got really excited about what's going on. So I think there's a lot of upside volatility. I think there's a lot of opportunity in some of the trades we looked at. A lot of stuff today where things were pricing very interesting. As far as you can get a lot of gamma for not a lot of money, or actually positive gamma and positive theta we were putting together in a couple of names because they're moving so much and near-term vol is so high in them. So it does give you some opportunities to put on interesting positions that you normally can't do. But, who knew Goldman Sachs was going to be up $27 or something like that in a week and a half, which I think is what it is, over 10%. JPM similar, Bank of America similar, a lot of those. So, and I'm not saying they go down. I think they feel like they're still going to be a little volatile, but there's some, there's interesting positions that you could sling if one were of a mind to do so.
Well, we are of a mind to do so here on the old program, so we'll get to that in a little bit. First, let me welcome on Uncle Mike as well. Uncle Mike, I know you like to play a lot in the commodities as well. That's been one of the interesting areas, perhaps one of the interesting laggards of this quote-unquote Trump rally. Call it what you will. Whatever is driving this rally, it seems to certainly coincide with the election of Trump, whether it's him or not, or who knows. But still, anything Trump these days, so just completely toxic. But that said, the market is rallying. The one area that we haven't seen the love for is crude. Crude kind of flagging yet again, even today, which has kind of been an interesting area. We touched on this a little bit. By the way, if you're deep into all things crude, listeners, I encourage you to check out our program, TWIFO This Week in Futures Options. Comes out every Friday on the network where we stream it live, 3 p.m. Central. You can, of course, get it every Monday morning, the podcast version, if you can't join us live. And check it out there. A lot of you doing that this morning as well. We take a deep dive into crude there as well. But it has been kind of interesting to watch. And structurally, the puts are still leading the dance out there. People are buying puts out there in products like WTI. So it shows that longer term, the concern is still with the crude. So let's start there. I know you like, I believe XLE is your crude poison of choice. But I won't put words in your mouth. So what's your thoughts here on crude not playing ball with the rest of the market, as well as what else caught your eye in today's activity?
Well, a couple things. And yes, you are correct. Crude is my commodity, or I'm sorry, XLE is my crude poison of choice. So to kind of go, we can start with that for right now. Since Trump was elected on November 8th, crude actually closed at, looking here, 69.32. And it popped the first couple days, and then now it's back down on XLE. It's back down, but it's still up from November 8th. So since pre-Trump, we're still up roughly 0.5% in XLE, and I think a lot of that would have to do with the market coming up, meaning that I don't think it's necessarily because of the fact that crude oil is doing so well, but I think it's the stock end holding up crude oil. Now, crude itself, looking at November 8th close, I'm showing a close of 44.83 a barrel. And right now we're at 43.50 a barrel. So with that, it is down a little bit, but I wouldn't say of anything of major significance so far. So I still am not considering this a huge event as of yet, but it is down a little bit, no doubt about that. And that's crude itself, not XLE. A couple thoughts that I have. First off, I want to expand upon what Andrew was saying in terms of how this is just more of a Trump rotation. In that it's not so much a Trump rally, because if you look at what the S&P was on the close on Tuesday, on Election Day, you'll see that we are ahead a little bit in the broad market, but it's only roughly 1%. And that's the S&P, which represents roughly 80% of all U.S. business and commerce. The Dow, on the other hand, that is making new all-time highs. We are having a lot of, as Andrew puts it, to add to what Andrew says, the bank stocks are making new highs, and a lot of the traditional tech stocks are not making new all-time highs, to say the least. So I do think it's more of a sector rotation-based rally as to what's happening right now. And a lot of it I do think is overblown initially. One thing that I do plan on doing over the course of the next week or so is to just kind of have more, I shouldn't say plan on doing, but I plan on seeing over the course of the next week or so is where are we going to go with this? We're gradually learning what more of Trump's policies are going to be. We're gradually learning what more of his cabinet's going to be. I personally think the last week or so, it's just going to be a lot of overreactions and noise. I do feel that it's a little bit too good to be true with some of the financials, and I could see some buying opportunities with some of the technology. So I think that kind of adds up to a whole lot about nothing so far. It's just a very reactionary market. The other thing to keep in mind that I want to mention, folks, I know this had to do with an election night, and I know it was a lot of just initial lack of predictability is what a lot of us were trumping it up to be. On election night, we were down 107 points in S&P futures. So with that being said, I don't necessarily see that happening tonight, but we still were just there in terms of actual market movement just a few days ago, less than a week ago. So with that, I don't think now is the time to be complacent by any means. I would still be very cautious right now. The other thing that I want to mention is that we were not able to achieve a new S&P high throughout this rally. It's just kind of been more of a rotationary high in the Dow. So I would tend to be very cautious. Now, the final thing, and I've said this on the show last week as well, when we make new all-time highs in the S&P, I'll be glad to say my trademark saying again, and I'll jump on board and be a Super Bowl again, as opposed to now just being, I guess, a regular perma-bull, but I'm not Super Bowl level. I'm just perma-bull level right now. The other thing that I want to mention is gold. Gold has gotten the tar beat out of it over the course of the last week or so, and there's no rotation, nothing to say about that, except for, in my mind, I'm just saying, TGIH, thank God I'm hedged. I actually am long GLD, have been long GLD for a long, long time, but right now my hedge is at the 120. I'm long the 120 put, so it's not really super concerning to me at this point. I'm actually looking at levels to, as Andrew would put it, do stuff. But the other thing that I want to mention on gold is that this is one where, along with tech, if you are interested in gold, around the mid 115s in GLD, I see levels of support. This could be a buying opportunity in GLD as well. Now, in my situation, whether I'll be selling more puts, rolling down the put, doing some type of a ratio repair, buying some calls, whatever the case may be, that's something I plan on executing over the course of the next few days. But at this stage, I think the other thing to mention right now is the fact that gold has gotten royally pounded. There's a lot of currency issues. We have the Trump peso inversion to where it seems like whenever Trump has success, the peso goes down. The dollar has been relatively strong over the course of the last couple days. Combine all that if we do have an expectation of the Fed raising rates, that could also be a bearish sign for gold. Now, those things that I mentioned, everybody knows. So with that being said, the question is are all those things factored into the price of gold right now? And at this stage, I kind of think they are. So another thing to look at, and that's my take on the markets today. This is going to be a fun show to do over the course of the next couple months because we're going to have a lot to talk about just about every day.
All right, then let's get to it and keep on rolling out of the trading block and into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. This is indeed the portion of the show. Brian, I hope you brought your fedora and indeed a trench coat. I didn't mention that in the show invite, so fashion advice for future episodes. This is, of course, a portion of the show where we venture into the portions of the options market that most fear to tread the dark, the shady side, the unusual activity side. Let's kick things off. When you think shady, you think unusual activity, of course, think Canadians. And indeed, the Canadian Natural Resources Limited, ticker symbol CNQ. Kicking it off. There you go. And I just offended all of our Canadian listeners. I do apologize. It was a joke. All right, let's move on. CNQ closing today, $30.84, up about a third of a buck or about 1% on the day. It's the thing that does about 1,100 contracts a day. So not lighting the world on fire, but pretty decent for an odd block candidate. Today doing a wee bit more than that. Nearly 33,000 contracts. And of that nearly 33,000, 31,107 coming on the call side. 18-1 calls over puts. That should give you some inkling of what the heck we were looking at out here today. And if you want to scroll on down for yourselves, listeners, just scroll on down to DRYS, and you'll see it. It'll pretty much pop off the screen at you. It's the DRYS 34s that we're lining it up out there today in good old CNQ, with paper starting off, gobbling up a block of about 16,000 of those, buying for about 35 cents. As the day went on, we saw additional size get up. Well, actually, before we get into that, even that first block started getting filled at 25 cents, then subsequent kind going up later for other prices, including 35 cents total of about 26,000, so another 10,000 coming in after the fact. So pretty decent size volume, however you want to look at it, for any name, let alone a name that does 1,100 contracts a day. Open interest is pretty decent on that strike, about nearly 15,000, but still nowhere near the 26 that went up today. And they went out 40 cents at 45, so all that buying activity on top of a bit of a lift in the stock, not hurting things on that strike. Looking here again, we looked, didn't see any stock going up with this, so this is as it appears to be on the old surface, which is straight up upside love here for good old CNQ. Looking back at the past year or so out here in CNQ, this thing has flirted ever so briefly with the 34 level a few times, including most recently, actually, about a little less than a month ago in late October, where it hit about the 33.5 or so level and was pushing 34, then kind of retreated back down to where it is today, right around the 31 level. Our friend here clearly saying, you know what, upside palooza that is going on up there in good old CNQ. Mr. Rock Lobster, let's kick it off, if you will be so kind, sir. Joining us from all the way in the hinterlands of Maine. What are your thoughts on our friend here, loving themselves all the upside here in CNQ and doing it pretty close to home, doing it in DRYS, not in Jan or Feb or anything. He wants it to happen. He wants it to happen fairly soon.
Yeah, originally I thought it was kind of a buy right or some sort of call writer.
It has that feel to it, doesn't it?
It does. And then, but it looks like the bid was posted. The market was kind of wide in the morning. They posted the bid. Then somebody lifted 20 options at 25 cents. And it's always sort of like, okay, when you're in the crowd, the broker has a lot of calls to buy. So they, okay, what are they? And we'll start buying them at a quarter and then make everybody miserable and print a bunch of them a lot higher. So that's kind of, because the market opened, there really wasn't a bid for them at all. There was standing quarter bids, and then it started getting filled, and then they printed a bunch just higher. So it looks like somebody wants to own these things, and volatility is up. So again, this was probably, I don't even know if this is in the XLE, but it's one of those energy stocks that was $14 at the beginning of the year, and now it's 30, and just wildly bullish paper in this name. I didn't see any stock go up. There wasn't a stock tag either, but that doesn't mean there can't be some somewhere. But I mean, you just don't normally buy calls that are 10% out of the money in a stock like this. Is all I would say. There was anyway, an interesting chunk of paper for sure.
And when I look at this is basically when I'm buying out of the money options. I just really like where this person came in. If they all came in and they were on the buy side, one of the big things that I like to look at if I'm going to go out of the money is to go out a little bit further in time. So they ended up buying or trading the 20 delta option, which is basically saying there's a 20% chance that it's going to get up to that level by that expiration date. I mean, in theory, or that's what delta can lead you to believe. But I think that this is just overall a bullish trade in Canadian Natural Resources, and they're looking for a fairly big move in the shorter term, but they're giving themselves some time. And when you give yourself time going out further by buying out of the money options, the further you go out, the more deltas you pick up. And so very interesting trade. And the fact that they just wouldn't let them go and just kept piling on, I think is they, instead of taking the profit, they're looking to add more. And that's another interesting thing that happened here.
Yeah, that's a good sign that they're still feeling the love for all things CNQ. Let's move on to another name that we've felt the love for a few times here on the show. Pops up on a regular basis. This is our old friend XLF. This is the Financial Select SPDR. I know a lot of you guys like to play around out here, particularly of late. The financials and banking names have been moving a wee bit. This name has been averaging, and it certainly blows the doors off most of the typical odd block names we talk about. This one averages about 127,000 contracts a day. Doing a little bit more than that today, to the tune of 673,000 contracts, lighting it up out there. About nearly 3-to-1 calls over puts out here. It's about 500,000 on the call side, about 177 on the put side. And if you want to know where all that paper was lighting it up, again, a lot of paper lighting it up, so you have to scroll a little bit all the way out to Jan and to DRYS. That is where we saw our love fest happening. And if you do your scrolling, you'll see it pretty quickly. It kind of jumps off the page. Actually, I said Jan, I meant Jan and Feb, not Jan and DRYS. Let's go here to, it was the Jan 2017, of course, 22 calls versus the Feb 24 calls. Doing that call spread, looks like paper doing it, starting off the day at least, about 20,000 by 50,000 times, 20,000 on the Jan, 50,000 on the Feb. As the day went on, looks like more paper piling into the Jan to the tune of about 100,000 total on the Jan strike. Also saw the other strikes nearby are fairly active as well. The Jan 21s, 55,000 going up there, and the Jan 23s, 32,000 going up there. There's about 152,000 open on the 22 strike which is why we have the feeling that it was a bit of a roll. Ton open on the other strikes as well. So pretty much all this paper could indeed be closing. Going on out to Feb, where the open interest is a wee bit less. 21,000 and change on the Feb 24 strike versus the 51,000 total that went up on the day today. Paper doing those, at least those initial chunks for 57 cents and 22 cents respectively, going up on the ISE, at least in the early kind, on two big blocks as the day went on. They pretty much got them anywhere they could. So it looks like you're closing out the Jans, and clearly the Jan 22s are in the money now, so that trade probably leaving a bit of a smile on our friend's face. So he's selling out the Jan and then turning around and deciding he's not done yet. He still wants to play, but he's going to play a little bit higher up the food chain. This time the Feb 24 strike, not doing it quite the same size. He's doing it only 50,000. So not putting all the house money back, keeping some for the old bankroll to live to fight another day. But still looking as it went up here today, looking decidedly bullish. Our friend here not giving up the ghost, saying, there's more upside to be had here for XLF. If you follow this name, it had a bit of a move back in September, right around the time of that old divvy out there, and ever since then was vacillating on the 19 handle until very recently. Again, the post-election rally we're seeing out here, a lot of these names popping, including XLF, popping all the way from about the 19 handle up to where it is today, right around 22.20 or so. So Mr. Rock Lobster, our friend here, obviously liking the post-election bounce, but also saying, he's not done yet. He thinks there's more to come. So what do you have to say here for our friend who's feeling all the upside love and also laughing all the way to the bank here in XLF?
Well, walk back with me in time.
Ooh, a time journey. I like time journeys.
Do a time journey. I wish I had the theme music.
Okay, 1917, World War I. How about that? Let's go there. A happy time.
I'll go back to last week.
Oh, okay, a little closer.
Where the Feb's 22, 24 stupid, we thought those guys were buying. They basically paid through the offer for a bunch of calls. They're paying 6 cents for the Feb 24s.
Yeah, it was a funky town. That's right. And we mocked them roundly.
Who buys those?
That should be the first sign. When there's round mocking here on the odd block, then we know that perhaps it is the path to fame and fortune.
When you and I agree that who buys those, the next day I'm going to buy that crap. I don't care. We're like 10 for 10.
Yeah, if we didn't learn from Men's Warehouse.
Run over.
Yeah, if we didn't learn from Men's Warehouse, our friend in XLF. Maybe it's our same friend. He listens to the show. He's like, I'm going into I'm going to XLF now, and they'll mock me, and I'll print more money as a result.
So I guess that future past performance is no guarantee of future results, but when Mark and I are both totally wrong at the same time, anyway. So it looks like those calls that traded for 6 cents on the Feb 24s are now trading 22 cents. So that's almost a 4x on some junky little calls. This looked like kind of a double up roll. The way it was priced, taking money on one and rolling up to more, just buying double the calls for more credit. Somebody doing the house money roll up. That's, if you want to buy calls, that's the way you make a lot of money. Keep taking money off the table and buy more calls. So if it's working, it's working. And it looks like there's just more paper piling into that strike, how it was priced the way it looks like. So just the little walk back down memory lane, but we're giving our listeners the heads up when you and I say there's no chance that these calls are ever going to be worth anything. I just let's put it this way. I wouldn't go out and short the underlying. That's for sure. Close your short at least.
That's the kiss of profit on all things. When it's roundly mocked on the odd block, then perhaps something low probability event is about to occur. Bet the yo on the horn high yo on the crap sale. I think next for Thursday's show we should go a little farther back. Maybe Waterloo, like 1816 around that time frame, something along those times. But I'm sure there's a lot of listed options activity back then. We can also discuss some strategy oversights and things. Does that sound fun?
Well, let's say, who is the guy that invented the Rothschilds when they invented the semaphore, so they could get the battle results before the government announced them, so they could they got super long British gilts right after the battle because they knew who won first. So they
there
just
you go.
bought them all off.
Early HFT semaphore. I love it.
It was a semaphore HFT at the time. But
Early
hey,
front
what the
running.
heck?
Just goes to show we've been doing this for centuries here.
This show has been around a long time.
Front running ourselves, and indeed the odd block all the way back since Waterloo. That was a pre podcast days. We actually did it on those old wax cylinders. All right, let's keep on rolling here into our final name. You may be familiar with this one. This is Square Inc. Ticker symbol SQ. Closing $12.35, up about half a buck or about 4% on the day today. This is going to be our resident cheapie for the day. No cheapie biotech for you today. I'm sorry, listeners. No $3.50 name or something like that. $12 will have to do you for today. You may know this name, of course. They do a lot of the mobile payments processing. Stick that little Square payment reader in your iPad or iPhone, and all of a sudden you're a mobile merchant. And this name does about 4,600 contracts a day, doing about 17,000 today. And of that 17 and change, 16,783 coming on the call side. So about 46 to 1 calls over puts. Out here, if you want to see what caught our eye, it was the Nove 12 calls going up for 45 cents, a block of 1,000 to first catch our eye. As the day went on, 4x that went up, total of about 4,000 and some change going up on this strike. Initial kind going up, looks like paper buy-in for 45 cents. The latter prices somewhere in that range. The calls went out 40 to 45 cents on the day. So still offered there for 45 cents. That first chunk went up on the SIBO, marked as a sweep. Looks like the rest went up in a similar fashion. Open interest is about 6,200 contracts here. So potentially, and we're gonna lean towards probably closing here on this one. Someone perhaps closing out the old short call on the 12 strike again. Today's pop of about half a buck, probably giving them a little bit of an itchy trigger finger on the cover side once you blow through your strike to the upside. The covered call, perhaps not as desirous anymore, particularly if you're not looking to unleash a bunch of stock on the 12 side, or indeed if you were just naked shorted. That's even less attractive at that level. Looking back at the year that was and has been so far here, for Square, it's been a bit of a tumultuous one. I'm sure a lot of you probably follow this name. Back in the earnings and Q2 earnings here back in April to May timeframe, they really took it on the chin. They got clipped down from about $13 south of the 10 handle and kind of were vacillating around that range for quite some time until earnings again in AUG kind of popped them back up over the 10, back into the 12 range. Where they are now and where they've kind of been vacillating for the better part of the past few months. Again, this little blip here today is marking the near-term highs on this one. Got as high as 1262 intraday here. So we'll see how this one goes. Mr. Rocklofter, take us home here. What are your calls here? What's your thoughts on all things Square? Do you guys use Square over there at Option Pit for your payment processing?
I
can see you running.
Actually,
I can see you running around Maine with a little Square reader in your smartphone of choice, saying, "Give me your credit card."
I wish I could do that. However, most of our people come to us via the virtual thing. So we have a very annoying payments processing system in our website. I wish we had a Square thing because it would make it easier. Square in, Square out. This has all the smell of not much was happening. We're gonna start writing some calls. Square's really not doing much, and then surprise, Trump gets elected, and every financial company in the world is instantly becoming massively valuable. Cover. So it does look like some short covering. I'll just check an OI, the open interest on that. But Square is, I think it's kind of a perennial takeover target. Visa owns it to them, I think. So, I think anyway, it is it is something that could be, or MasterCard, I don't remember if they own a piece of them, something that could be in play, but at least for right now, I think it's covering. It has all the look and smell of, I really don't want to be short these calls anymore.
Does have that certain odor, that parfum about it. They break through the 12 handle, and they're getting the heck out of Dodge. No more for them, and no more for us, at least here on the Odd Block as we keep on rolling. It's Monday, it means it's time for you guys to join the fun and open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like our friend there, Mr. Announcer Man, said, you can join us. No shortage of ways. If you're able to join us on Mondays or Thursdays, live, 3 p.m. Central, 4 p.m. Eastern, via Mixler, you can hit us up there by a question. I know a lot of you guys also like to kind of stream in stealth mode, so you're not in the chat room, but then you can also hit us up via social media. If you have a question, you can do that to keep our team scrambling, make us work for a living here on the show, finding and ferreting all your questions and routing them to the appropriate area. But hit us up, Facebook, The Options Insider, Stock Twits, or Twitter. We're just at Options there, really easy to find there. Or again, in the chat room, if you can hit us up there as well. If you have a Mixler account, for those of you out there so inclined to do so. And let's kick things off. It is that time of the week, so let's go to what we asked you. And this one already lightened it up, posted it about an hour before showtime. We got all week for you guys to vote in if you haven't voted already. And we thought we'd ask about everyone's favorite hype machine, a.k.a. sometimes manufacturer of cars and battery packs as well. Tesla mostly manufacturing the hype, it seems like these days. The hype not doing so well for them these days, taking it on the chin today. It got down 120, that'd be something. 182 half. Let's see how low it closed here today. Closed actually south of that again. Took it on the chin yet another buck. Closed down to 181 half or so on the day. So a fair drubbing for Tesla today, off nearly 4% or about 7 handles. We asked you guys, and at the time we did this, it was around 182 half, so we'll measure it from there to keep things precise and above board. We asked you guys, hey, it was 182 half. The Straddle was priced in by the end of the week, an $8.20 move, so about 4.5% by the close on Friday. At the time, the implied vol was about 41, and the historical vol was about 31, so a nice 10-point gap there. So we asked you guys, how do you think it's going to move? What do you think this Tesla is actually going to do? So we gave you the choices of inline, so right around, we gave you a nice generous amount. We didn't say has to hit exactly 820. We said somewhere in the 8 to 8.5 range. We said beat the Straddle, which is going to be kind of over that 820 or indeed that 8.5 range. Less than the Straddle, so shy of that $8 range. Or we said, are you just sick to death of Musk and Tesla and all that fun stuff? Decent people voting already. Again, you got all week. It's a question of the week, so you got all week to vote. If you haven't done so, head on over there at Options, make your voices heard. Brian, we'll start with you. You are our guest. You get pride of place here, infamous pride of place, perhaps. What is your vote first? How do you think that Straddle is accurately priced? Think it's overpriced, underpriced, and then B, this is where the rubber meets the road here, the fun part. What do you think our audience, our listeners, are voting for?
I think you can get along the Straddle here. Just because in general, Tesla just moves. I can't fathom if you're looking at a weekly Straddle and you're paying $8. I think I'm buying that just in general in Tesla. And then you consider the way the markets are moving right now. It's funny because we actually went and looked at on the options blitz today, and we actually did look at Tesla that we talked about, and actually looked at the opposite, but going further out in time and actually look at doing a iron condor in Tesla, which is a little bit of a crazy trade. But as far as the Straddle is concerned, I can't. I'd be buying $8 Straddles more than not in Tesla, because one of the things I see in Tesla is it doesn't even need news. Overall, it's not necessarily need an earnings report or need some special event for this stock to actually get some moving. Yeah, all it really needs is for Musk to speak, and the stock just seems to move immensely. So if you force me to take a side here, I think I'm going to get long this Straddle, and that's hard for me to do. I don't like to do long Straddles that often, but if I'm my hands forced, that's where I'm at.
We're forcing you, sir. Leave you to twist it into an iron condor or something far more
an
sensible.
Iron condor today in Tesla on a totally different program, just out of the blue. So it's so odd that's part of the mail block segment this week.
It is funny, but we can't go sensible when we talk in Tesla. You got to go straight up gobbling up all the premium or selling it. There's no spreading off of risk. There's no reducing of premium outlay. None of that sensible shenanigans here on the show, sir. There will be all
valid point. It's a fun one to trade because of all that premium. You just have so many different options, even if the trade goes against you. So it is an interesting underlying, and I thank Elon Musk for bringing it to us.
Yes, he has done his job there in giving us a nice tradable vehicle. Sometimes perhaps a little bit too tradable, but definitely delivers in the tradable department. Uncle Mike, let's head to you now. What do you think? What is your vote, first off? And then B, what do you think is winning our poll?
I'll say long straddle for both of them. It's a good point. Just a tweet can definitely move Tesla. I like that, Brian. Just it's a stock that doesn't need news to move. Doesn't even need news, and if it gets news, it moves. So the only thing I can think of to add to that, I wish Donald Trump had a publicly traded company, because whenever he did a tweet, can you imagine how much that thing would move?
Yeah, I was talking about that with someone today. I was like, are they going to let him keep his Twitter handle, tweeting from the Oval Office? That would be something interesting to see. Maybe they might claim. I remember the big deal when Obama tried to use his BlackBerry 8 years ago. Oh, how antiquated that seems now. But that was a big deal. Now we'll see if Trump can. Probably the next debate will be, can he actually do his own social media, or will he have a handler or two do it? We shall see. Last but not least, to the lands of Maine, Mr. Rock Lobster, what is your vote, and what do you think is winning?
We looked at actually a long-term short play for this, because it's part of the narrative of kind of the green, sell the green stuff. And Tesla trades at a massive multiple. So I would say just, I think over the straddle for the week, without too much trouble. So that's, if I was trading it, that's what I would do. Although I would find a way to do it for cheaper, which we looked at last week. But I would say, yeah, it's not in a happy place right now, that stock.
Yeah, the hype machine. Usually, you're right. They can come in and put out a tweet or something and kind of bolster it a little bit. At least so far, not able to do it. But we've seen this play out before. Tesla taking on the chin, going under 200. Oh, the end is near. Bam, rally back. A tweet or two, a press conference or two, and bam, they're back over 200. As I said, it's only been up about an hour so far. The votes are clearly in. Pretty much behind everybody here. I forgot to give my vote, but I'm kind of see the numbers, so it's kind of cheating for me to vote. But I probably would be leaning in the, especially since it already moved the buck since we posted, I'd probably be leaning in that camp as well. 47% saying it's going to beat the straddle, so go north of that 820 or so. About 24% saying less than the straddle, so under that $8 or so level. 12% somewhere in line with the straddle, and then 17% of you are just sick to death of Musk and Tesla. Hey, I feel you. I feel your pain. I could certainly see how you could be in that camp. All right, next up, we got one here. I like this handle. Moolla. He wants to know, what the heck, I'll make it the family-friendly version. What the heck is up with DRYS? Thing is going nuts. Takeover, lots of call trading. Those are all question marks, by the way. DRYS, if you're not following it, is kind of the saga of the day. This stands for Dry Ships Inc. This thing closed today at $42.86, up a whopping $29.26, or about 215%. So if you haven't seen this one today, I looked at a chart of it. I encourage you to do so. Because it was rocking and rolling. We'll answer the last part first, because that's easy. Were there lots of calls trading? The answer was a whopping yes. This name does about 214 contracts a day. Today, doing about 2,080. Only 18 puts trading out here today. That gives us 115 to 1 calls over puts. As to what's happened out here, a lot of stuff. Is kind of the confluence of many things, but at the end of the day, it's pretty much your basic short squeeze. Squeezing this thing to the upside. There was some bankruptcy restructuring, and it seems like they're going to emerge from that a little bit stronger than people thought, or maybe emerge better from it. They've been selling off, I think, some vessels over time. That's helping to finance it, but now there's also been a bump up in some demand for shipping. For a variety of reasons, including perhaps some local referendums here. So all of that kind of moving together to drive the squeeze to the upside, and kind of just, when you get these crazy squeezes, they can kind of take on a life of their own. That's kind of what we're seeing out here today. 215% out here in good old dry ships. All right, Mr. Rock Lobster, I can see you just blowing a gasket here behind the scenes. So what do you? I'm sure this was a hot one in the pit chat today, and I believe you have a shall we say more or less family friendly version of what's going on with dry ships. Take it away, sir.
An anecdotal story. So because we in our pro group we were looking at BTU UQ, which is the old Peabody coal. You know, massive short squeeze in that one. If you want to see another ticker, that one off the hook. This one, and I know this sounds weird, but all of the dry shippers, they thought since California legalized pot, that all of the dry shippers are going to start shipping bales of pot all over and that started, I think, the squeeze for this stock. That was like the goofy rumor thing last week. I think DRYS was what, $2 or something like that, maybe. It was maybe, it was like $4 or something. And something got squeezed. I'm not sure who it was. There might even be like a famous fund manager that was shorted. I'm not quite sure, but it's caused a massive dislocation. And I think a big problem too is that the reg show rule that the SEC passed under much fanfare is just going to cause this like insane short squeezes at this point. Since everybody has to deliver, or they have massive fines, it's going to cause problems. So that's what I think that's what we got with this. So it's mess on top of mess on top of more mess. And that is what we have. So I don't know where it goes. I have no idea. It's a mess. But I think we have yet to see now that there's like investment banks and stuff have pulled away from providing liquidity and things like that. It's not going to surprise me to see more messes like this in the future from that rule. But it's what it is. That's the rule. So somebody is having a great day and somebody is having a very sad day.
Brian, I'll save you the ignominy of having to respond to your compliance offices, having to respond to Andrew's allegations there of what is actually driving DRYFS. Either way, dry ships rocking and rolling. There you go, Mr. or Mrs. Moolla. That's what's up with all things. Bet you didn't think it was going in that direction, which is interesting. Let's see. We got, really quickly here, this one comes from Berg83. He wants us to explain what we were talking about. I don't know if you recall this one last week, Mr. Rock Lobster, and Brian, you can weigh in this one too. I know you like your odd put roll. We talked about a put roll down in MRO. They were putting up 6,000 of, there was a Nov 14 DEES 13 put roll. They were closing out on the Nov 14s and opening up on the DEES 13s. The weird part about this one, as you recall, is they both went up on the offer, and that was kind of a little too funkalicious for our friend here, Mr. or perhaps Mrs. Berg 83. He didn't understand how that could be. So want to walk him through the nuances of execution, and then Brian, you could chime in if you have anything.
All right, sounds good. Who's jumping in first?
I think Andrew will, because we actually talked about this on the show last week, and then you can dive right in right after. You remember this one, Andrew, or has all your legal shipping wasted your memory?
No, it hasn't. This was the one where they were closing the one and opening the other, I thought.
Yeah, it seemed like it. Yeah, it seemed like it, but it was weird execution in the fact that they lifted the offer kind of on both. It looks like they paid up to close Nov and then got a more decent facilitation on the D's to make up for it.
Right. So what happened was, this is what I thought. I thought they were short some Nov 14 puts, and they got what I think tickled a little bit on the short put, meaning they weren't quite. I think this was the 2-cent roll, right? Like 51 over 53 cents.
Yes, 51 and 53.
See, I can remember things. It's amazing, huh? So anyway, it got a little too close for the November 14 contract. So the trader opted for basically not really gaining or losing any extra money, but maybe losing 2 cents, roll down to December to buy some more time. So the way I think that it traded, they printed it higher. He had to pay up and take the bad mark in November, but looks like they're going to get a potentially better mark by a better sale in December. So as far as if you still want to hold MRO, I think it's just the person wanted to stay in. They're just the short-term drop in oil caught them by surprise a little bit, and they just wanted out. And right now it looks like the right thing to do because those puts are marked around 26 or 27 cents. So, I mean, they just exercise a little caution short-term to give themselves a little room longer term. So, yeah, I don't know what they have the position against that, but that's what the trade essentially, that's what it looked like. But
yeah, our friend here, Mr. or Mrs. Berg, they were saying, they're trying to figure out options still. I should have read the rest of their question, but they're holding out on MRO and want to buy more. Brian, I know you talk about this a lot with your clients over there at Trade King and your community, and indeed on the show you do on our network. Some of your thought process. You can make it specific to MRO if you like, but more maybe in general, your thoughts on when you kind of roll a short put, when you do it. In this case, instead of the up and out like a covered call, they're going out and down on the put side. So any thoughts you have you want to share there with our friend Berg83, have at it, sir.
All right. Well, one of the big things about MRO that I find interesting, that, you have the price of oil that drives it, but it's also a refiner. So if you chart it relative to the USO, which is, basically a popular way to trade oil, it really follows the USO quite well. It does it with a little bit higher beta. It's got a little bit more volatility in it. But if you're looking at just this stock in general, MRO is an interesting vehicle as opposed to trading these ETFs that have so many large fees in them. And I totally understand this person. They're saying, well, I was happy to buy it at 14, but so now I'm more than happy to buy it at 13 if it comes on down. Now, they adjusted soon enough that they were able to get the roll done for a decent price. So that's the biggest thing when you're looking at rolling options, is that if you are rolling, you have to make up that decision soon. In other words, you can't let that stock get, 2 to 3% in the money and still think that you can go out to December and still be able to roll. And that's probably the biggest thing here, is that the person had an opportunity to roll down. They're still willing to buy some more in this trade, and especially down around 13. We're getting pretty low in the price of oil for MRO to be put to you at $13 a share. So in general, I think MRO is an interesting vehicle if you just like to trade oil. It's got a little bit higher beta, but it does still seem to track with the price of oil pretty well.
Yes, a good friend, by the way. That is Marathon, in case we didn't make that clear here. It's a lot of good questions. Wish we could hit more, but we got to keep rolling. We're coming up against it. So let's dive right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, you spent so much time answering your questions that we kind of went a little long. So we're coming up against it here. So that music means we're pretty much out of time. So we're going to do a nice quick combo here at the end of the show, where instead of just talking about what we're looking at for the rest of the week, we're also going to tell you what we have cooking that may interest you. I know you got to hop off pretty soon, Mr. Rock Lobster. So let's start with you. What are you watching for the rest of this week? And then, what, if anything, that's interesting is cooking over there in the land of the pit?
We have a boot camp coming. We have a volatility course coming in January at Option Pit. Also, what's coming this week? Just a great unwind. Is this technology? The tech bloodbath, which happens from time to time, going to be over as the big unwind goes. Today on a weekend, VIX was only up 31 cents, so it looks like it might be slowing down, but we'll see. But I mean, there hasn't been a green day in the queues in a while, so I think since the election. So those are the biggies. That's all my stuff.
There you go. Head on over to optionpit.com to learn more. And Uncle Mike, same question for you, sir. What are you watching for the rest of this week? And what is cooking in the land of all things RCM alts and going long?
Continuing to watch, ponder, and determine a course of action for gold, waiting to see if the S&P will make new all-time highs in the near future. And in terms of what's going on in the land of RCM, folks, if you are looking for a financial advisor for the Thanksgiving holiday, or, well, permanently for that matter, feel free to give me a call. I'm happy to work with you. My number is 312-212-3531, or send me an email at mtosaw@rcmfs.com.
And Brian, last but not least, you are our guest, so you get to take up the end here with what you're watching for the rest of this week, whatever's catching your eye, what's on your radar, as well as we haven't had you guys from Trade King on in a while, at least on this program. You guys have been up to a lot of cool new things over there. What's new? What's cooking over there in the land of all things Trade King?
All right. Well, first of all, I'd actually like to pose this to some other people on your show too. Is when you get long Mexico, is it possible for Mexico to go bankrupt because of just an election in the U.S.? Because it's
you think
definitely getting beat up.
You think he's going to make good
on a little bit of a bounce back?
You think he's going to make good on his pledge to make them pay for the wall then, huh?
Yeah, in general, and that's one of the biggest things that I'm seeing here too, as far as Mexico is concerned, is you can say whatever you'd like, but the policies still need to be put in place, and things need to get changed. And we know how the government can be overall once you start trying to change things and get things done inside that bureaucracy. So I'm just kind of surprised that it's getting beaten up as bad as it is, all just because Donald Trump was elected. But overall, there's got to be a time where we jump in, and I'd like to know where that time is. I'm not quite sure, but I'm definitely keeping an eye on that. And then also looking at the tech stocks. Really like to see where Amazon is going next. We had a 3% down day on it. If that thing got anywhere near to 700, we got another day like today. You have to think hard about getting in on Amazon and enjoying the ride. But those are the two big positions that I find interesting at this point in time, or the stocks. And of course, you're always just watching oil and thinking that it just can't go on forever, but it just seems to keep going on forever. So. All right, so that's basically where I'm at. And then as far as Trade King is concerned, yeah, we have a lot of fun things going on. We have our show here every Monday and Tuesday on the Trade King website. We have the Option Blitz on Monday at noon Eastern time, and then we have a midday market call every Tuesday at noon Eastern time. And as always, follow me on Options Insider Radio with Options Playbook Radio that usually gets posted every Thursday afternoon.
There you go. If you haven't checked it out already, listeners, make sure you do so. You're missing out on a fun show. It's a nice, great little bite-sized show. Comes in, hits your earphones, hits your iOS playlist or your app, or however you listen to the show once a week. A nice 15 or so, maybe 20 minutes on the longer end version of breaking down strategy. I know you've been doing a lot of cool earnings-related stuff. So if you're saying to yourself, man, how should I play earnings? What are some interesting ways that I could play earnings? Then by all means, check it out. You can also hit us up or hit the show up there over there, Options Playbook. .com, or to search for that in Amazon. You can find Brian's book and pick it up there, and you can actually walk through all those plays. So if that stuff's new to you, if you want to learn about all the Greeks and the basic strategies and the spreads and the legs and how to use them, then that book may be a fun one for you. If you haven't done so already, head on over to TradeKing.com, kick the tires over there, and see if you'll be so inclined to light the fire. Thank you for joining us, Brian, and on behalf of Brian and Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, for sending in such great questions. Keep those coming. We'd love to hear from you guys, and we'll see you next time right here on The Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.